How bad could it be for the Eurozone this year?
Well, I mean, first of all, from the European Commission perspective, their starting point is so high that the cuts will be very sizable. I mean, they've got 1.9% growth in the Eurozone. We are 1.4. And if anything, you can argue the risk are to the downside. Italy will be the one everyone will be watching because there's report that they might cut it to 0.2%. That is also our growth forecast for this year. So clearly, the environment is one of growth much weaker than what they had anticipated, and certainly like also, for example, that the ECB is still anticipating. We don't think we're heading for a recession. Right. We think that there is resilience in the domestic demand. The big question for us is why this is not translated yet into more consumption. There has been a significant slump in terms of confidence. But if you look at the underlying data, wage growth is at the highest level in more than 10 years. Employment growth is still going. So we still expect a little bit more domestic demand to come through. But the risk here is that actually we have confidence has deteriorated so much, business, consumer, that we might be in a more prolonged period of slump. And that would certainly be a concern for the ECB.
Okay, so the ECB doesn't move this year, or can it do something? And if you look at what the Fed can or can't do, is that it for monetary tightening in 2019? We
actually think there is a little bit more space for the Fed to do something. I mean, I think including the latest data from the labor market report in the US, they show that there is strength in the US economy. Consumer confidence is still strong. And therefore, we think actually there is room for the Fed to hike another time in September. So we got a 25 basis point hike there. We don't think the same is true for the ECB. And we think at some point, the ECB will have to come to terms with reality. And for them, it will be very hard to hike rates. And I think Draghi has made it clear it's not important enough for them the concerns around profitability of the banking system to be able to do a couple of rate hikes of the depo rates. For them, it's about the economy, it's about inflation. If you think that through next summer, inflation could be as low as below 1%, in that environment, for us, it's going to be very hard for the ECB to start a rate hiking cycle.
So, Fabio, what does that mean for euro dollar? Is it actually a dollar story? Is it also a euro story?
Well, for us, actually, all that environment is still good for the dollar, and that's why we got a euro-dollar view at 110 by the end of the year, because the Fed has more firepower. If even in a bad growth situation, the Fed can cut rates. The ECB would struggle to do that. So there is more strength on the side of the Fed. And also, if you look at very simply just comparing the yields, even of very short term, I mean, clearly there are very good reasons for continue to put money and invest money in the dollar. So we think that remains a good place for the dollar this year.